20 years since Enron filed for bankruptcy. Perhaps no investor better identified with that event than our next guest. Jim Chanos began shorting Enron a year before its collapse, calls that trade the biggest of his career. Jim joins us now along with the Vanity Fair contributor Bethany McLean, who was one of the first to write skeptically about Enron while at Fortune. She also co-wrote the book, The Smartest Guys in the Room, The Amazing Rise and Scandalous Fall of Enron. It's so good to have you both with us. Thanks for being here today.
Hi, guys.
Jim, I'll start with you. In looking at the research and looking back at history, you were first turned on to the Enron story, I think, in October of 2000 because of an article that was written in the Texas version of the Wall Street Journal about accounting practices at large energy trading firms. Is that correct?
That's correct. It was a piece in the Texas Journal, heard on the street column, by their accounting reporter, John Weil, who many years later came to work for us. And it talked about Enron getting approval from the SEC for so-called mark-to-market, which is actually much more appropriately called mark-to-model accounting for their energy derivative business. And what that led was aggressive accounting on their derivatives book in lots of areas. But that was just sort of the opening chapter and what got us to open a file in September, October of 2000.
You took a look at their 1999 SEC filing and then actually put the short on in November, which, as I said in the intro, you say was the biggest of your career. Can you quantify at this point how big the trade was at the time?
Well, I think biggest in my career. It's sort of in terms of possibly just history, not in terms of size of position, because our fund got much bigger afterwards. But we have a position limit, like any short portfolio. But it was pretty much a full position from the get-go. I mean, we saw enough. Beyond just the derivative accounting, there was just a myriad of executive departures in 1999 and 2000. There was quite a bit of insider selling. But what really got us intrigued and became much more important, as Bethany can certainly tell you, was this odd disclosure in the footnotes about these entities in which a senior executive of Enron was the general partner that did business with Enron. And we now know much later, of course, those were the famous SPVs off balance sheet, the Raptors and the Chucos and so on. And Enron began to disclose more and more about those as each quarter went on, as we got into 2001.
Bethany, what's so interesting about your involvement in this whole thing? I have the Fortune cover in front of me, which I'm going to hold up, and of course, you have to look all the way up into the left corner of the cover, which simply says, "Is Enron overpriced?" Your intrigue in this story, I think, at least began more on the valuation side of the stock rather than having deep-rooted thoughts about major shenanigans taking place at the company.
Yeah. For sure it did. I've often joked that story should have won awards for the weakest title in journalistic history, because given that the company was bankrupt 6 months later, I guess, yeah, it was overpriced. But, part of it was that back at that time, I was young, and we were coming off this time of incredible optimism in the markets of the dot-com boom, where these things weren't supposed to happen. And I think it didn't. I think I was too naive for it to really occur to me, or for me to really process that this could be a gigantic fraud. And so it was a valuation issue, because it's hard to remember now, but Enron was just this star of a company. I think I began that story by saying Enron was an it stock, like an it girl in Hollywood. It was that popular. I think every analyst but one had a buy rating on the stock, and people thought the stock was going to double in the next 12 months. I mean, it was this superstar of a company, sort of like a Google today. And so the idea that the gap between the reality of the company and as exposed by its numbers and the reputation of the company was just mammoth.
I'm wondering if you can also shed some light on a story that we've heard, too, about Enron executives sort of knowing that your story is coming, and Andy Fastow and others literally flying to New York to try and get your story shut down. And Jeffrey Skilling at the time, who did not travel to New York, but whom you spoke to on the phone, basically suggesting you had no idea what you were talking about. If you did more research and other things, that you would understand their side of the story. Can you recount both tales for us, please?
Sure. So you have to call as a journalist, obviously, before you write anything about somebody. And so I called Enron, and I sort of expected that poo-poo the whole thing. I thought they'd be like, yeah, everybody raises these criticisms, whatever. And instead, they got really upset. And so Jeff Skilling told me that I was unethical for writing this piece because he said that if I understood the company, I would realize how ridiculous the things I was saying were, or raising were. And so it was unethical for me to write a story when I had so little comprehension of the company's actual business. He later explained this phone call in congressional testimony after Enron's collapses. We wanted to tell her explain to her the question she was asking, which I thought was awesome. Anyway, so then they had Andy Fastow, along with a couple of other executives, fly up to Fortune's offices. And I still remember waiting at the elevator banks in the old Fortune and the old Time Inc. offices in Rockefeller Center and thinking, oh my God, what have I gotten myself into? I was terrified, to be honest. And so we sat down with Andy Fastow and these couple of other executives in this windowless conference room at Fortune and went through everything for hours, including these off-balance sheet partnerships that Jim mentioned and which turned out to be critical to the story, but which I left out of my original piece. The reason I left it out is that, again, I was naive. The accountants and the board of directors had signed off on these partnerships, and I thought, well, this doesn't sound right to me, but I guess it can't be wrong if all the gatekeepers signed off on it.
Yeah, that's such an interesting part of the story. Jim, Bethany also mentioned this love affair that Wall Street analysts had with Enron at the time. Not a single one had a sell rating on the stock. As we sort of spin the story forward to where we are today, are we any better today than we were then from a research or a sell side of the story?
I don't know. I mean, the sell side is there, primarily to sell ideas to their clients. Being too critical, particularly if you're an industry analyst, is not going to win you access to management, which is crucial for most sell side analysts. So you have to take a lot of it with a large grain of salt. It can be insightful. We get sell side research, we read it. But you also just have to understand, as you would from a short seller who's short a stock, you have to understand point of view and incentives and just, what are the facts, what are the opinions, and what are you not reading or hearing? I think it's important. One thing I want to mention about what Bethany just said, it's kind of really important to bring the story to today. Bethany came up with a concept that I actually teach in my course on fraud. And it's the concept of what she's dubbed legal fraud. And I think that the vast majority of corporate wrongdoing, both then and now, falls under this umbrella of what Bethany calls legal fraud. And that is basically everything is done by the corporation to the letter of the law. The accountants and the attorneys sign off on the deals or the accounting, as she mentioned, but yet there's an intent to deceive. And I think that's a really important thing for investors to understand from the Enron story. Everything Enron did literally was pretty much by the book. There were a few things where they crossed over the bright line, but yet there was an intent to deceive. And they were actually prosecuted for lying to shareholders, not for accounting fraud.
Sure. And Bethany, I'm wondering, from your perspective, lastly, the role of regulators today. You talk about the gatekeepers sort of allowing this whole thing to happen. But what about the regulators? Do you think we're any better today than we were then?
I don't. We passed in the wake of Enron, we passed this law called Sarbanes-Oxley, and there's a great speech where President Bush stands in the Rose Garden and talks about how the markets are now safe for ordinary investors because executives will be prosecuted if they deceive people. And 6 years later, there's President Barack Obama standing in the Rose Garden giving the speech as he passes Dodd-Frank in the wake of the financial crisis. And when you read the two speeches, they're remarkably similar, right? and I don't think much has changed, and it does go to this concept of legal fraud, that a lot of wrongdoing in the markets is perfectly legal. People think of Enron as this gigantic fraud, but much of their accounting systems were legal, and that's the problem: is the very clever use and misuse of the rules with an intent to deceive and obfuscate.
It's fascinating to look back and reminisce about not only then, but think about where we are today, if we're any better off.